We appreciate all of the guests who have appeared on our show and sincerely thank them for providing you, our audience, with useful information. However, the advice our guests provide is theirs, and we encourage you to seek out a professional if you have specific questions about any topic we cover on the Crushing Debt Podcast. On this week's episode of the Crushing Debt Podcast, how the Fed's rate hike will impact you.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law, and I'm joined again by my co-host, George Corbello. Welcome, George.
What's up, guys? Your financial coach is here again. Let's do it.
And I made him formally sign the agreement. So,
of course, a lawyer has me sign documentation. Whether it's like, hey, this, just letting you know, this is mine. It's all good, brother.
but it formally gives him the title of co-host. So we're happy. Thank you. Yeah. So, how's it going? How you doing?
Doing well, my friend. I got to say, it's trying to help people in these times. I got to say, is some crazy times out there that we're dealing with, but still trying to help people maneuver and continue to move forward with their financial independence journey, I think, if you want to call it some kind of fancy thing that I do. Nice.
So a couple of topics that we've been brainstorming. We've had a couple of interview shows under our belt, but this is, again, the first time in a couple of weeks that we're just talking to each other and talking to you all. Before I get into it, I do want to talk a little bit about our sponsors again, because even though I got a co-host, we still got to pay the bills. So I've talked a lot about Mark Purvis. He's our editor. He takes out all the spaces, all the ums, all the ahs. He does not edit for content. So when you hear us make a mistake, we tell him not to edit that kind of stuff out. But he's got a website called legacyspotlight.com. And what Mark does is he will record your stories, or he'll record your parents' stories or your grandparents' stories. And it's a fun exercise to do with your family, with your loved ones. And so if you want to record stories for future generations, or if you want to make sure that you capture the older generation's stories for you and for your family, again, contact Mark. His website is legacyspotlight.com. It's fun, and it's a way to preserve memories for generations to come. So, a couple different topics that I thought George and I could talk about. Actually, some of them are George's topics that he thought we could talk about on today's episode. I kind of want to jump into the one that spurred the title of the episode, how the Fed's rate hike will impact you. So, as we record this, the Fed has just raised interest rates 75 basis points. And now by the time this episode comes out, we'll be a couple of weeks beyond the rate hike. And so who knows if they're going up more, who knows if they're coming down. But I mean, really, the reason the Fed had to do this is because we've got rising inflation. Yep. Whether we're in a recession or not can be debated, but we're at least heading that way. And, the government was giving out all the stimulus money at the end of 2021, and we got to figure out a way to repay that. And the way to do that, I think, is through the rate hikes and to try to stop the oncoming recession, try to stop inflation, or at least control it, or maybe reduce it. And so what do people do? Interest rates are going up. What can people do about it?
And what does that mean, too? It's like, okay, the interest rate's going up itself. How does that impact me as my everyday going to the grocery store kind of thing itself? All I'm seeing is the prices are up. Going to the gas pump. I mean, again, I like the joke. You gotta sign a loan to get a full tank of gas nowadays, and it's crazy itself. Obviously, state to state, but we're seeing all these rising, kind of costs, and it's like, what do we do? What does this mean in regards to the rate hike itself? But I mean, it's going to have an impact, I'd imagine, on like credit cards and mortgages and all of these other things as well. So it's like happy times ahead. Oh no.
Well, we'll see. I saw a meme on social media. You're not supposed to, when you're about to close on a home loan, you're not supposed to go buy a new car. You're not supposed to go buy, people get excited and they go out and they buy all this furniture for the new house. And you can do that. You're just not supposed to finance it, because if you're trying to get a mortgage and you finance the purchase of a new living room furniture set, that's going to mess up your credit score, which is going to mess up your ability to get the loan just before closing. So I saw a meme that I forget exactly what it said, but it was something along the lines of, please don't fill up your gas tank until after closing.
There you go. But it's funny how we can joke, but these are the kind of decisions people are making right now in regards. It's some hard decisions that we're trying to make. Like, all of these types of raise in these costs itself are all around the four walls. We talked about like our house, transportation, food, and utilities. Like these are the things that are basic. Obviously we have to worry about the debt that we may be having itself, but when we're hitting the basic things to just live, that's where people are freaking out.
I mean, I've got to go. I'm in a quarter tank of gas now, so as soon as we're done and I head back, I've got to go fill up. The problem is I like going to Costco because I get cheap. It's cheaper there. It is typically 20, 30, 50 cents cheaper at Costco than it is anywhere else. But the problem that causes are literally lines around the parking lot. So you've got to wait a good 20, 30 minutes to get gas at Costco. I don't know. Things are weird. So we did find a Yahoo News article, the 5 ways the Fed's interest rate hikes will impact Americans. And so I figured we'd go through each of these 5 and talk about them a little bit. And so like you already alluded to, George, one of the first points here, mortgage, car, and credit card payments are going to increase. Now, I have a buddy of mine who is a mortgage loan officer, a mortgage originator, Bill Mantooth, who's been on the show before. And I forget the exact number, but a loan that you could have gotten yesterday, now that the interest rates are up and interest rates on mortgages are going up, that in a day is going to cost an increase in your mortgage payment if you didn't lock it in of hundreds of dollars, which is a huge impact.
And that's per month, right? This
per
is
month.
Not, this is, you're thinking 100, the life of the, no, this is per month.
Yeah.
So so that, and again, APR, depending on what kind of, loan you take. I mean, I've had, mortgages with the balloon payments and the APRs. I mean, obviously everybody should be doing fixed. We should have been doing fixed. But some of us still, from a loan perspective, if you're doing any type of that kind of loan, oh my goodness, there's just some scary times coming up because that's going to increase tenfold in regards to your monthly payment.
Yeah, and if you've got an adjustable rate loan, hang on because it's going to get crazy. Now, I don't think there are as many adjustable rate loans out there anymore as there used to be when the foreclosure crisis, the real estate market crash a couple of years ago, I think cleared out a lot of the adjustable rate loans. They do still exist. Right. I just don't think they're as common as they used to be.
But the credit card? Oh boy. Yeah, that one. And we're all complaining right now with our store credit cards itself at 24%. Any type of increase that way, I mean, come on. Any increase itself, and you know how it is. When it goes up, credit card companies are so flexible to say, you know what, I get it. Let's lower your interest rate to help you with your money. No, they're going to want to keep, taking the money. And so if it's, if you have debts in one credit card, and again, average is like right now it's about $7,000. Credit card debt itself, you're talking 24%. Credit card companies are like, thank you.
Yeah. If your strategy was to pay off the card with the lowest balance, you may want to shift that strategy in the short term to pay off the card with the highest interest rate.
I totally agree with that. I think right now I think all of us are going to learn right now that we're going to need to look at our budgets and make some adjustments based off of the sign of the times. I think right now, it's good to be, keep saving, keep doing what you need to do, but we may need to make some adjustments to be able to continue to move forward with some of our plans or get started. It's okay, guys. We can still get started even during this time as well.
So the second thing the article points out, stock markets are falling and seeing dramatic swings in prices. So the only thing that I can really analogize to this is my Coinbase and my crypto account. And I had a friend of mine give me $100, and he said, "Here, invest it in Coinbase and different types of cryptocurrencies." That $100 grew to about $150. Now it is worth that $150 is worth an entire $37.79.
Not bad. That would be freaking. So imagine you put a zero or a few zeros to that. I would be a little bit concerned in regards to that. I got to say, though, when it comes to the stock market, the more common thing right now is everybody's freaking out on their 401ks. Yeah. Everyone's like, how am I investing? How am I doing? People look at the short term and it's like, oh my goodness, I'm losing money. It's like, okay, hold on, guys, hold on. you only lose money if you sell.
Right.
You only lose money. And that's where people, we've got to remember where we are in regards to it. I get it. For our folks who are getting close to retiring or in the retirement, I can see where they're a little bit worried. But once again, let's look at where we are. What adjustments do we need to make to be able to, again, withstand? We know the markets are going to always go up and down. We've just got to kind of settle in and the news is going to tell us, right? Oh my goodness, run for the hills. Let's calm down. We know things will stabilize. This is where, again, a good strategy, good foundation allows us to be kind of ride these lows and highs within these types of times. So.
Yeah, contact a financial advisor. Contact
Please.
your financial advisor. I mean, it is a pendulum. Right now things are going in the direction of the recession, going in the direction of dropping stock prices, but eventually it will reverse course and things will go back up again.
Yeah.
So,
and you know who takes advantage? People,
politicians.
Well, okay, let's keep it nice now. But yes, I would say the people who are in good foundation, they do the investing during these times. People who are ready to make money, it's like if you're in a position to be able to invest, to be able to buy, this is always the perfect time. The problem we run into is that most people, we spend when everything is great, don't have the foundation necessary, and then when things turn around, we're still wondering like, oh my goodness, what am I going to do? How am I going to manage? Why am I not making progress? These are the things that we've got to learn as we go in this up and down roller coaster.
Exactly. So the third point here is it's going to be harder to find a job. And what the author here said is that price increases that shrink demand also have the effect of forcing companies to cut costs. And one of the first places they look to do that is in the labor force. Now, to me, that point is interesting because so many companies are still hiring because of all the layoffs. And I forget what it's called, the great...
Resignation.
The Great Resignation. So because of the Great Resignation, lots of companies are looking to hire. So I wonder if it will get harder to find a job because companies are still trying to hire.
That's true, but think about it like this, salaries, hourly rates, they've increased those to kind of keep up with the time. Obviously, a lot of people not wanting to work for low wages. I support that completely. Pay your workers, people, please.
Right.
But I can see where companies, just like us personally, they have budgets, they've got spending plans they've got to worry through as well. Some of these things are going to be the same question. It's like, okay, where am I going to need to save money to ensure that the business sustains, and what we need to do to ride these kind of low times as well. Yeah. So unfortunately, it's going to be in the same boat. I would question that one too, because you're right. I think there's been so much chatter around hiring and bringing in people itself and needing the right people. But I can see where, maybe from just past history, these types of rate hikes, we got to worry about if there's going to be a job kind of freeze that we've got to worry about.
Well, and I can tell you for the law firm, our biggest expense is payroll. Our biggest expense is employees. Now, I'm not...
Well, I thought it was water, but that's okay.
I'm not... Right now, I need a lot of water. I'm not interested in firing. In fact, I do plan to hire another attorney. Is my goal for this year is to get at least one more attorney here in the office. So we'll see. It's an interesting dynamic in terms of you've got a lot of companies that are hiring, but it makes sense that if you need to cut costs, one of the first and easiest costs to cut is payroll.
Yep,
so that one will be interesting. The fourth point that the author here brings up is the likelihood of a recession is growing. And I remember when I read that one, I started laughing because I think we're in a recession. I know it's hasn't.
Not official. Until the government tells us or the news tells us, it's not official.
So one of the best definitions of an economist that I've ever heard in my life, the best definition of an economist that I've ever heard, economists have correctly predicted 10 of the last 2 recessions.
Okay. 20%?
No, 10 of the last 2.
10 of the last 2. Oh, I'm sorry. Never mind. Yeah. Carry the one. Oh, wait, go ahead.
In other words, they're always saying recession, and
Gotcha.
They're rarely right.
Gotcha.
But in this case, I think I do see the signs of a recession. I would guess that we may be in one. If not, I think we're going to be in one. I mean, like I said, there's There's no other way to repay all the stimulus money that we all got at the end of last year. There's no way to sort of get a handle on inflation. I think the only way that those kinds of things happen naturally is with a recession.
Yeah.
And, I get
no one's
it.
rooting for it, but it's one of those kind of things.
My bankruptcy practice kind of is. But
My man.
no, we are looking for it. I joke about it, but I know it's a serious thing, and people are getting in financial trouble, and that's what we're here to help, both of us, me and George.
Yeah.
That's what we're here to help with. But yeah, the likelihood of a recession is growing. Maybe we're in one. Maybe we're on the cusp of one. Maybe one's coming. I guess time will tell when we go back and the economists look and start to put some of this stuff in place. The last point along the lines of water is wet. The national deficit is going to cost taxpayers more. Really?
Duh? Really?
So,
how is that possible? But yeah.
So
that's obvious. I mean, come on. We can't keep spending money itself and think that, for some reason, somebody's got to, it's got to come from somewhere. That's always the case itself. Although I keep hearing, though, it's like, well, the government just keep printing money, right? I mean, just print more money and we'll save the economy. I mean, what's that mean regarding that, too?
Yeah, the problem, though, with doing that, I mean, again, that goes back to sort of simple economics, which is basically what happened at the end of last year. If we flood the market with cash, with money, a lot of people are going to save it.
Right.
People may or may not use it to pay down debt. Instead, they'll save it, or they'll spend it on stuff that maybe they need, maybe they want, whatever. But printing money, just creating money out of thin air, will have the impact of devaluing money.
Right.
So it'll be worth less because there's more of it. I mean, simple economics 101.
But I didn't take that. So am I in trouble there with that? I hear. No, but that's what I'm saying. Like, you still keeping it real with everybody out there itself. When we talk about, like, who's thinking about that, you know what I mean? Like, they're just like, what do I need to do to just get through this week? What am I doing? How is all of these changes, these costs? How do you get the people to not worry as much? That's the thing that we're in this mode right now of, like, all we're seeing is prices are up everywhere and there's no help in sight. Like, what's happening here? I
mean, having been through the Great Recession and the real estate market crash, we had a newspaper subscription. And I mean, for me, running a foreclosure defense practice and a bankruptcy practice, I would read all these articles and get a smile on my face.
Right.
That the media is saying the sky is falling. But that's really what caused me to cancel my newspaper subscription. I kept it for a little bit because we would get all the coupons on Sunday and then save some money on groceries.
They stopped taking those now, too. But
yeah, those are gone, and the coupons really started to be stuff that we never really bought. So when that happened, when we went, like a month or two without using any of the coupons, I was like, forget it. What am I paying for this newspaper for? All I'm getting is bad news and coupons for stuff I don't want.
You don't need that belt?
No.
The 4 belts that they have for $19. No, good.
I can get a great deal on Pepsi, but I drink Coke.
There you go.
Come on.
Oh, we're already on the opposite end there, buddy. Sorry.
So I just stopped. I mean, for me, it was, the question was, what can people do about it? Stay aware of current events, stay knowledgeable, continue to keep yourself educated and aware of what's going on.
Right.
But at the same time, some of that negative chatter, some of it may be even linked to social media.
Yep.
As you know, I'm president of my homeowners association, and I might have even talked about this on the show a handful of times before. There's a social media page tied to the homeowners association.
Right.
And when I became president, actually I joined that page when I was just a resident, and then I became president. And what happened was, whenever there was a board meeting, people would just bash the board, whether we did good, bad, or otherwise. People would just slam the board. We had a couple of high-profile kind of things going on where, people were in violation of the rules, and so they'd get a violation notice, and they didn't think they should have received a violation notice, and we would get slammed in social media.
That's usually the first. Why the social media? Like, what's that? It's like, I just want my grievances out into the universe.
Nobody's ever won an argument on social media.
Oh, well.
But what it caused me to do is just unfollow the
turn off
page.
the notifications.
Yeah.
So you don't get bombarded with,
and
you stink.
And my social media life is so much more pleasant because I'm not getting bombarded by people that are sending me hate mail through Facebook keyboard warrior messages.
Yeah.
But I think that has to be kind of the same attitude. If you're listening to the show and you're like, gas prices are going up and grocery bills are going up and utilities are going up or my mortgage is going to go up and this is going to go up, my credit cards are going to go up.
Yeah.
Don't worry about it. Do what you got to do to provide for your family and do something fun.
I got to say though, reset the plan. Make sure you have something in place. But I agree with you itself. Make sure you put some fun into it itself. It could be, again, guys, you don't have to spend millions of dollars. Bike rides, local parks, a lot of that stuff is free. Do what you need to do from that perspective. Take nice walks, whatever is needed. Do things that are happy, make you happy, bring happiness, because it's not just about the money. As much as we'd like to, make sure we focus on those kind of things. Life, guys, take advantage, enjoy that while we're trying to get through it.
The Zac Brown band? Mm-hmm. One of my favorite bands. The year that my wife and I got married, they had a new album come out. One of the songs in that album was called Let It Go. I don't know if you're familiar with that song. That was our wedding weekend theme song.
Okay.
And I told my wife, that's going to be anytime you say to me, oh my God, blah, 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 let it go. Just let it go. And I think that has to be...
Not the Frozen version, guys.
Not the Frozen. No, not the Frozen Let It Go. The Zac Brown
Although I do want to see you sing it, but let's go.
I'm not singing nothing. I don't want to break these mics. But I think that's, let it go. You can't worry about things that you can't control.
Right.
So the Fed raised the interest rates, fine. You can't control that. So don't worry about it.
Yep.
Just live within it and change your plan, adjust your plan.
Yep.
The other analogy that I heard is that when a pilot is flying an airplane, let's say from Miami to Atlanta, they don't make a straight line from Miami to Atlanta. And if they have to adjust and go a couple degrees this way or that way during the course of the flight, that's fine as long as they end up in Atlanta. So if you need to change course a little bit, if you need to mix up the mix of your stocks and bonds, if you need to get out of cryptocurrency, if you need to get into cryptocurrency, into real estate, out of real estate, whatever you need to do, just make a tweak and a shift here or there. So,
and here's the thing too: talk to your, to people who can help you out. We've got your financial advisors, financial coach, help out like behavior wise and what you need to do, get that plan together.
I know a financial coach who could help out.
Yeah, there you go. And the other thing too, even with you, like if you're in dire straits and need to know what next steps, that kind of thing. Again, Sean, you're here for that. I mean, that's the thing is, it's like, guys, we're going to learn everything on YouTube. I get it. It's not, but talk to the professionals, talk to people who know what you're going through and kind of help you calm down. Because at the end of the day, I think that's all we're looking for itself is something that will calm us down to be able to say, it's going to be all right. Yeah. It's I mean, we all got to go through it. But let's not go crazy itself and thinking it's like the zombie apocalypse that's happening out there on Friday.
Exactly. So I do want to give credit again. This is an article from Yahoo News written by someone named Tobias Burns, and the date of the article is Friday, June 17th of 2022, which ironically is when we're recording this. So if you want to check out that article, you can check it out on Yahoo News by Tobias Burns. If I can remember to link it in the show notes, I will. But yeah, so what else is going on, George?
I would say, like, guys, we know everything's happening here itself, but what else is going on? Let's just try to plan for the summer, plan for vacation, enjoy some time off. I know we're all working hard and trying to get some of these things going itself and trying to stabilize and just try to get things going. But I would just say take the time off, take some time to mentally charge yourself and get going again. That's how we're not going to last if we're trying to run 100 miles an hour each day for 24 hours. So that's my PSA for the evening.
The one thing significant that sort of related, but not much. One thing that's a little bit related, I know I'd been talking in previous episodes about the Florida legislature wanting to increase the car exemption from $1,000 up to $5,000. Yeah. So right now, Florida law, what I've always said, Florida law has some of the best homestead property protections. The home where you live, your primary residence, has some of the best homestead property protections, but some of the worst personal property protections. And so one of those exemptions, one of those protections, Florida residents get a $1,000 exemption for one car that they own. So if you have a car that you owe 10 grand on and it's worth 11 grand, well, the 10 grand of debt eats away at the equity. You've got $1,000 worth of equity, and then the Florida exemption kicks in. You can protect the rest of the car. The problem that this raises is when people go to file bankruptcy and they've maybe managed to pay off their car in full, but now they've got a car worth $4,000 or $5,000 or $6,000, and Florida law only allows them to exempt $1,000. So the trustee says, "Great, you got a car worth $5,000. You have a $1,000 exemption. Give me $4 grand or give me the car." Florida doesn't have, this is my only method. This is my only means to get to and from work.
Right.
Florida law doesn't care. Well, the legislature introduced a bill that went to the governor that would raise that limit from $1,000 to $5,000. Okay. So again, same example. You got a car worth $5,000. It would be completely protected. The bankruptcy trustee couldn't touch it. You got a car worth $6,000. Now maybe you got to come up with $1,000 in order to get your bankruptcy discharge. So unfortunately, that went to Governor DeSantis's desk, and he vetoed it. And at first, I was like, "What the heck?" Because I think that by and large, there's some stuff that DeSantis has done that I think are just stupid. There's other stuff that he's done that I agree with.
Right.
Any governor.
That's anybody, man.
Any president.
Yep.
Same thing. When I actually dug into it and looked at, well, why did DeSantis veto it? The reason he vetoed it is because the legislature wrote it in such a way that that law would only apply in bankruptcy court. And so DeSantis said, no, I want this law to apply whether you're a Florida resident in bankruptcy or not in bankruptcy.
Right.
So, again, if you don't pay your Visa bill and Visa gets a judgment against you and your car is free and clear, theoretically, Visa could get a judgment
to try to get
and have the court give Visa permission to come hook your car and take it in the middle of the night.
Yep.
Now, you'd only have $1,000 of protection against what you owe Visa if that were the scenario. Under the law, the way the legislature wrote it, you're out of luck unless you file bankruptcy. DeSantis kicked it back and said, no. I want this law to apply regardless. Bankruptcy, not bankruptcy. I want the exemption for cars in Florida raised to $5,000 across the board. So bad news is he vetoed it. Good news is I assume the legislature will go back and change the language. They just got to do it at next year's session.
Next year?
I think so.
Oh, jeez.
I don't think there's anything they can do about it right now.
Okay.
Maybe they will, and I'll continue to keep everybody posted. But yeah, I mean, I agree that it's not really good for Florida people who want to file bankruptcy that have cars that are free and clear.
Right.
But I think in the end, once this law finally does pass, it'll be good because it'll raise the exemption universally.
No, and I mean, again, thanks for the detail. This is why he's so smart, man. But I mean, it's the detail itself that none of us itself, or most of us, are going to go into, and kind of read in. So it's definitely good information. It's disappointing that it's like, okay, great opportunity, but we've got to now maybe wait till next year. It's like hoping that our politicians can do more.
Well, it is the legislature. I've never kept secret my great admiration for our state legislators and federal legislators.
Well, everybody's a fan of that, right?
Well, they do good work until someone shows them something bright and shiny, and then they get all distracted.
We love it. We love it.
I know. So anyway, anything else going on in your world, George?
I would say I'm still trying to do, teaching and not trying. Of course, I'm helping parents to really how to talk with kids. So again, we got a lot of situations where we're trying to teach our kids good lessons, early money lessons. But it's tough. It's tough, especially when parents are struggling with their situation. It's like, how do I teach my kid to not make the same mistakes or have better money habits when they're younger itself. So working on programs like that locally, and obviously looking to make some of that stuff available online. So keep you posted. But that's kind of been my focus, is helping parents, help the next generation not make some of the same mistakes we're making.
Well, and we haven't really talked about this yet, but I have some ideas about maybe you and I doing webinars, seminars, classes, that kind of different stuff too. And it's funny. My grandfather always used to say, "You're practicing law. When are you actually going to get it right?"
Man, no, everyone's a critic.
Trying.
Everybody's a critic, man.
I know.
Especially your parents. But that's good.
So,
that's a good one.
Other than that, I do want to talk about our second sponsor, Sam Cohen of Attorneys First Insurance. Again, Sam writes errors and omissions insurance for attorneys and title companies all over the country, particularly in Florida, particularly in Texas. But he writes errors and omissions or malpractice coverage for attorneys and title companies all over the country. He did let me know the other day that whether you've had a claim against you or not, he can still find you a malpractice policy. So even people, attorneys or title companies that have had previous claims against them, he can still find them a malpractice policy. It may not be the cheapest policy on the block, but he can find somebody a malpractice policy in those types of situations. So other than that, a couple of other cool things planned for the show as we continue on here in this journey. We'll let you know as each week comes up. But George, again, thank you for coming into the, I don't know what we call it, the office, the studio, my desk.
It's a closet. No, I'm just kidding. No, I appreciate obviously just the good conversation, and we're just trying to help people get by. I'll let you have your little tagline to kind of remind folks why we're here, but definitely, guys, like, take charge. Take control of what your situation is and what you were trying to do, guys. As much as we'd like to hear all the news telling us we don't have control, you guys have control. Let's kind of make that happen one day at a time.
I totally agree. So I think that'll wrap it up for this week's episode of the Crushing Debt Podcast. Like George alluded to, which I don't think I said on one or two. I think I might have missed it, so I'm sorry about that.
Well, you're going to be told that. Let's do it.
I did.
Come on now.
We have to do it.
Don't disappoint the audience.
Although I don't know if you heard, there were a couple episodes where I first started introducing that line where I got it wrong. So, and I know what the other thing I was going to say is I've been getting a lot of good feedback. So thank you, those of you who listen, who have been emailing me about your thoughts about me and George and the dynamic now on the show. And I do want to say, publicly, thank you, George, because I was frankly getting a little, I don't want to say burnt out, but, doing the shows on my own took a lot of horsepower. So
there you go.
So thank you for helping me to re-energize with that. But with that, what I will say is that we do hope at the end of the month you have more money rather than at the end of the money you have more month. And we will talk to you in next week's episode.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.